This is Jeff Kohler, aka The Option Addict, from www.optionaddict.blogspot.com. Here today to address the other option addicts on the topic of adding to a winning position. I've seen this surface in the blog quite a bit as of recently, and I thought, well, what better way to visualize this than by creating a video on the topic. You notice right now I'm looking at a chart on Boeing, and I think Boeing was a classic example. And if you'll recall back about a month or two ago, you'll see that this was a setup that we had talked about. Let me kind of draw it out here for us. We were watching this as an ascending triangle, and we were thinking, okay, well, when this stock breaks, we should be able to expect about a 7-point movement over the course of about 3 to 4 months. So what do? We get ourselves a 3 to 4 month option, because we're not expecting anything as a percentage of the underlying stock that's really explosive. Thinking about going with a conservative option, getting a good quality option, and going in the money. Well, as you notice, as I scroll forward, the stock ended up breaking, and it ran as high as about $94 per share. But what happened was there for about several weeks, it just kind of traded sideways. Now, this is also a really important element when you're in an options position, is that if you've got a 3 to 4 month option, why would you exit during the sideways activity? Because you can see, the stock's just moving sideways, it's not moving against you. So what I'm going to do here is I'm going to kind of draw this little channel that it traded within so that we can highlight that. We'll come back to that in a minute. So we're in the trade, and maybe we've got a little bit of a decayed time. We're looking at a slight loss, but if it was a huge percentage loss, then maybe you didn't get the right option. Maybe you bought kind of a lower quality option to make this trade, which is part of the risk. That is something you have to consider going into the trade. It's trading sideways, so we don't necessarily want to get rid of it because we have a 3 to 4 month time horizon, but stock's really not doing anything for us. Well, we stay patient, okay? The stock's not going against us, so we kind of stay put. Eventually the stock ended up breaking out of that sideways channel. Now, as you look at that basing pattern, I think this offers a relatively easy line in the sand to adding to this position. And what I mean is this resistance level happened at right about $94 per share. Let's say you pick up a few more contracts. Your initial risk was about $91 per share, because that's what I teach, is that as you break through a resistance level, you use that as a line in the sand. Well, now, having moved up our stop from what used to be $91 a share, this old resistance level, now to $94, you can see what we've done here is we've locked in about $3 of gain into this stock. And because of that, that means we obviously have a lot less at risk than we did prior to getting into the trade. Now, because we have less risk on the table, what initially was about $3 of risk, now we've tightened that up and is now only about 1 to 2. We can afford to go out there, buy more shares or more contracts. And what we do is we simply move up our stop, which would now be this new level of resistance. So first and foremost, you need to tighten up your risk before you start thinking add. The art of adding to a position should be more defined on risk than it should be reward, because you don't want to go out there and double up your contracts without tightening up your stop, because now that just means you have twice as much money at risk, and you don't want to do that. You don't want to overload in any one position. Now, as I scroll forward here in time, you can see that right here at about mid-May, we got pretty close intraday. We got as low as about 96, but still nowhere near 94. Stock ends up moving a little bit higher. Okay, now it's up at $100 per share. What can we do? Well, let's tighten up our risk again. If you look here, there was a little bit of a basing pattern here, not for nearly as long, but for a few days, up at about $97 per share. To me, a little bit of consolidation, that seems like a reasonable area to set my risk. Now that my stock's trading at about 100, why don't I move it up to 97? Still gives me a little bit of flexibility. That's probably double the current ATR for this stock, and it allows me to go out there and buy yet more contracts. Now, I'm going to get the question, Jeff, are you going to go out there and buy the exact same contract you did? And it depends, because if a lot of time has lapsed, which since the initial position here in April, now we're towards the end of May, well, yeah, I'm probably going to go out and buy maybe a different month of expiration. And because the stock's sitting at 100 now, I'm probably not going to go out and buy the same strike, which prior to this breakout of 90 was about, I think, the $85 strike. I'm not going to go buy any more 85s because obviously they're $15 in the money, and I'm not going to get as big of a risk-reward ratio out of that trade. But I'm probably going to go into some 95s now that the stock's breaking above 100. So now here with the stop at 97, pick up a few more contracts, still making sure that my risk is first, and I'm not risking more in this position. Let's fast forward here in time a little bit. You can see it comes all the way back down. You can see as low as 97. Here it is right there on that particular day. And it rallies. And then eventually, you can see here, if we zoom in a little bit, I'm going to try to zoom in here just a bit. All right, so on this particular day, if this was your line in your sand, which was, let's say, about 97 in that range, you got a day that was about 50 cents below that. Now, again, I try to treat support as more of a area, less of a number. So if you get a day like that, and I'm going to get the question, well, what if that was the day that triggered your sell signal? Well, then what you do is you liquidate out of all your positions, you take your gain, if that was your line in the sand, and you can see very plainly that that level was violated, that there was big selling pressure, big volume on that day. That's obviously the day you'll want to get out of that trade. Anyhow, just wanted to take a quick opportunity to try to address this via video rather than write it. I think I might try to do some more videos like this that will talk on a certain subject rather than spend hours upon hours typing it. And this will just be occasionally, maybe once a week or so. Anyway, so hopefully the material was useful. Feel free to post any questions that you have in the comments section. I'll try to address those as I see them. Hopefully you guys are having a good week this week and are planning for a great weekend. And hopefully we'll see you back here on Monday at optionaddict.blogspot.com. Thanks a lot. Bye-bye.